GTII respects our supports as we make very important closures of the 5-day and 3-day candles. Let's go ahead and see what the possibilities are for the coming sessions. What is up, you guys? Thank you so much for stopping by. Once again, this is ARCa coming at you with a GTII technicals, raw price action, and statistical thread of analysis on this happy Friday. Before we get started, please make sure to subscribe to the channel, like the video, and share the video with a friend so that you and them could consider joining our trading community in Discord called ARCa Bulls. With that said, let's dive right into the charts. Okay, you guys, so we are looking at GTII on the hourly chart here, and of course, we definitely got those supports that we were looking for from our support line, and we got that bounce to the upside. If you guys were actually present during last night's Twitter space call with Busy Brands, Ham Short Killer, myself, and William P. Ferrand, I actually got a question from William asking me about the immediate short-term time frame, and I explained to him that I was catching something that I hadn't caught in the in these video analysis. So I actually saw last night a broadening descending wedge in the hourly time frame. Okay, so as you guys know, this is usually a bullish reversal pattern, and we definitely got the test to the upside. So yeah, we have a test number 1, 2, we have test number 3 here, capitulation event, right? We have that breakout to the top, test, true breakout number 4, and of course, we're retracing. Now, why are we retracing though? So I want to point out, see the top side of this candle here, you can see it on the H, right, for high. So you can see that the top side of the candle is $1.74, okay? So I want to take you to the weekly chart now so that we can see some things rhyming, okay? So let's just go ahead and pull that up now. If we could ever find it, here we go. Okay, so please notice here on the same valuations right up here, right? So in this case, we have the green candles open at the right down here, right at the body, and they close at the very top up here, okay? So now you can see the valuations up here. So look at the closing, okay? Because we're at the top over here. So the C would be, where it says C, right? So let's hover over that candle, and you can see the C at 174, right? This is our previous weekly candle. Now, let's go ahead and go over, let's see, these right over here. So let's go to the opening of this one. See on the O right up there, it's going to be right here. Okay, you can see the O is 175. Let's go to the close of this candle here. You can see closing is at 176. You can see on this previous candle, again, the opening is 175. So, and then even this one, even slightly, the high of this one is 178, still has some rhyming to it. This candle back here has an opening of 172. So you can see just the high relevance of the targets between 172 and 175. So that's kind of why we actually face the top side of 174, because it is a very strong area of resistance. So in fact, the resistance top zone of the 181 that we've been talking about for some time should actually be arranged between the area of 174 to about 180 or 181, right? So this would be our top side of the resistance. So this is very, very likely why we actually paused the price action, okay? So now we are actually starting something that could be a domino effect. Okay, because first of all, I did mention that we closed, and I actually did mention in my previous videos that it's very important that we do close the 5-day iterations and the 3-day iterations above the newly converted resistance, what was a resistance, into now a support. And we absolutely got that closure here, okay? So actually, yes, we got that closure right down here, upside of the area of about $1.50, which is that bottom side support that we've been looking at for some time, right? 150 to 156 was the bounce area that we were looking at, and we should not penetrate because it is an inflection point, okay? So we, in fact, closed that 5-day iteration as well as the 3. We used that 150 as a bounce to the upside, and now we're continuing, okay? So what I mean by a domino effect is actually this, okay? So let me just go ahead and point out something on the, you know what? I can use the stochastics, okay? So this is a series of stochastics momentum, the stochastic momentum. I use momentum in order to gauge a bias for direction, right? So please notice that this is the 30-minute, bi-hourly, 3-day, and the 5-day, okay? So what tends to happen is that the shorter time frames are usually, of course, the ones that tend to move up first, right? So we get the first thrust. Where's that brush right here? Right there we go. Okay. And it's not coloring. Okay, there we go. All right, so let me just get rid of that. And what happens is that we get the first immediate thrust, right, in the immediate short-term time frame, 30-minute. So as this starts going up, the next time frame will the shorter time frame would likely cascade into the next one. So as soon as this gets a higher thrust, then the following time frame, which is the bi-hourly in this case, it starts pivoting towards the upside too. So now as this one starts getting a higher and higher thrust, then you start to get the upper time frames. Like for example, this is the 3-day, now getting an upside pivot, right? And you can see that it's not as extensive as these. That's because they're delayed, because they're larger time frames. So this type of cascading event or domino effect is absolutely that we're looking for, what we look for statistical moves. Okay, now please notice that the 5-day, yes, the 5-day here, you can see that it's still not corrected all the way, but you can clearly see the pivots happening right now. So that's very likely to find a pivot and then continue on to the upside. And as this starts to make the upside, the shorter time frames will start to show that ebb and flow, right? Sort of like this, right? This thing will continue to the upside, then it'll do this type of thing, right? This will also continue to the upside and then eventually do this. So in time though, remember, so this is the 30-minute, we'll start that we'll start that decline just a little bit, then it'll bleed onto the next time frame, which is the bi-hourly, then it'll bleed onto the next time frame, right? It doesn't have to be the 3-day. I'm just giving you for a very short example, and then the 5-day will eventually find that downside. So what this does, it actually creates the opportunity of a continuation to the upside. And how? Well, when we start getting all of them to show that ebb and flow, then the 30-minute would actually start doing the corrective move towards the upside again. And with a higher thrust, then you'll start to bleed onto the next one, and then the wave starts all over again. Okay, and then you start to get that 5-day all the way up like this, right? So by the time you have this one all the way up here, you'll likely start seeing this one right at that point there, this one right about here, this one like right about here, and then the 5-day around down here. Right, so very delayed waves, okay? So, but they all, like, as soon as you have the one rising, the next one will rise, and then the previous one will start dropping. It's kind of a wave. This is the way I'm showing you, the way I personally perceive time in the trading world, okay? So this is in fact something that I am teaching my master's students, okay? And I'm giving to you guys it doesn't matter. I'm just expressing it to you the way I see it. Okay, so let's go ahead and move on to the next chart and see what we have. Okay, so all right. So I'm going to get back into that cascading event. Okay, because first of all, I want to take care of a couple things first. So I need to lead into that. Okay, so 6 hour. You can see here that we were actually making a very nice upside move. But the reason why I want to mention this is that we have an immediate correction in money flow, and money flow started showing sell pressure, but immediately corrected, and now the average is actually suggesting an upside, meaning incoming volatility or incoming money. Okay, and this is in the 6 hour time frame. Just to be specific. Okay, so now a very, very important, very, very critically important detail here that I want to express to you, and it is the continuation of our 3-day volatility versus momentum backtest. In what time frame? The 3-day. And what time frames were we looking for a very important closure? The 3-day and the 5-day. Why? Because we were looking for this move in the stochastics oscillator. Please notice that you know that back here, I think it was on the 13th of April, something like that, right? We actually made these drawings here, the orange and the blue line, saying that, yes, we are on a downtrend, but I am essentially expecting this type of price action to happen shortly. And please notice, okay, the orange line representing the yellow line and the blue line representing that teal line, okay? So these are just my drawings, right? I just put them there just so that I can show you what I'm expecting in price action over time. Okay, so you can see clearly that we're in fact making we're in the plan still. We're still moving according to the plan. Okay, you guys, so let's go ahead and just minimize this just for a little bit here and go ahead and notice that we have continued the contraction phase, which is a key component for that massive upside move that we have here. Please remember, it's just on average, okay, you guys, that we're making that 970% move to the upside. Now, please, I want you to know that anytime that volatility has expanded into critical volatility, 90 or within the 90 percentile, and started a contraction phase towards the downside paired with stochastic momentum, there has been a series, a large amount of iterations throughout the entire trading history of the GTII asset on the 3-day chart. Okay, so I have taken note of that duration, the upside thrust, and also the amount of times that the signature or the profile of volatility versus momentum have guessed the upside correctly versus incorrectly. Okay, so as you can see here, the official signal actually started right at about 47 cents, or at about the low of around 52 or 52 cents, right? So right around here. I'm sorry, the low, right? So actually 59 cents, right? So right around here is kind of where that signal fired, right? So as you can see that we were in critical volatility here, and you can see right down here that we were also starting to make that pivot towards the upside. Okay, so since then, we have been contracting, yes, with ebb and flow in between it, but we have been contracting. And thus far, a total amount of about, 400 and some odd percent has already been realized from the 900. Okay, so the 900% is still suggesting a massive upside continuation here. And in fact, the continuation of the contraction phase is yet again another validator for a continuation to the upside, even more with the EMAs and the SMAs facing towards the upside. Please remember that the closure that we were talking about of the 3-day, I was mentioning this, that we needed to close above a certain area in order for us to validate a continuation to the upside, of which we did meet. Okay, so it was a very important closer for us to meet. Okay, next chart here. This is another very interesting thing, okay, because this is the 6-hour volatility versus momentum backtest, and I want you to remember that based on the last time that we actually looked at this, right, we were actually measuring from expansion to contraction. Okay, so that move to the upside was literally this. From this area here, we started contracting, and we were able to get the stochastic momentum to move towards the upside as we started that expansion to contraction. This is how we were able to get that 36% move to the upside that we caught. Right? So what I want you to notice now is that we are creating the inverse of that move, which I don't have a backtest of because we have to perform it from contraction to expansion instead of expansion to contraction, right? So, but the higher probability here is that there is a continuation to the upside. Why? Because stochastics are starting to correct and starting to show that upside bias alongside critical volatility, usually indicative of a pretty a continuation of an upside move. Okay, you guys. So bi-weekly Gaussian channel, we're still respecting that 130 support. We're definitely right above it, and I want to express to you the shorter time frames because those are the resistances we're facing alongside of the previous 5-day or weekly closures at that 174 level that we spoke of. Right. So let's go ahead and notice this. Okay, check it out. The mean band of the Gaussian channel on the weekly chart is located where? 173. So 173 to, like we talked about, right? So 174 is what I said to about 181 would be a very important area as a key resistance range. Okay, and as you can see here, we are knocking at the door of that 173 or 174 from the Gaussian channel mean, and this is likely why the bi-weekly still hasn't continued. Right. So remember that we need the shorter time frame to kind of topple into the larger time frame. And this is just what's happening. Look at the 5-day. It's topping out where? 174. You see the mean band located right at 174. That range is very much an important range to break out of. Okay, but you can see here that we're knocking at that door. We're really trying to get through it, creating creating a series of higher highs even still. Okay, so this is very impressive. I love it. Okay, so let's go ahead and move on to the last part of the analysis and really touch on the cascading event or the domino effect here. Please notice 30-minute immediate short-term time frame in the bullish control zone, the bull strength percentile with an upside pivot on both the RSI signal and the 14-day simple moving average. Notice right over here, 4-hour making a very important bullish cross above that 14-day simple moving average and suggesting an upside continuation. So as this one started first, please notice that this one's way higher. This is at 64%. This bled into the 4-hour, which the 4-hour is now sitting at 51%. And the 4-hour is very similar to the 8-hour. The 8-hour is sitting at about 51.26, just slightly lower. Then it bleeds into the daily, and the daily is sitting just under that at about 49%, and the 3-day and so on. Okay, so now yesterday's space call with Ham Short Killer and William P. Ferrand, I did mention that there was a very interesting bull control in the in the semi-annual chart. So this is the 6-month chart. Okay, you guys. So let me just go ahead and bring this into. Let me get rid of that. I'm gonna bring this into light. How can I do that? I think it was Command. There we go. Okay, so this is the 6-month RSI. Of course, we don't have enough information historically because they deleted the rest of the information in the back, right? But we were sitting right at about here yesterday. Okay, at about 69%. I mentioned this in the space call, saying that we were, it may have been actually in the live. Actually, it was in the ticker picker, you guys. So, I mentioned that we were absolutely in the bullish control zone and the gravitational zone, the 6-month RSI, and I expressed that the likelihood of us getting pulled into the overbought percentile was very likely. And in fact, we got that today, right? So this is looking very good for the for the higher term, all right? So I love it. All right, you guys. So immediate short-term time frame, guys. I definitely see an upside continuation here. I want to express again that we do have a critical zone to kind of combat here. The 174 to about 181 would be that area that we need to break out of. Okay, so if we are able to break out of that, I would seriously consider an 8-hour minimum candle above $1.81. I'm talking about a clean break without a wick to the downside. Okay, like not this. All right, not having a wick below the line. I need a candle similar to not even this is actually, it's actually slightly below that, right? We need something along the lines of maybe like this one here, clean above the line. Okay, so maybe that can help us continue on to the upside. But until then, we are still within this chop box. Okay, you guys, I just want to be abundantly clear about that. And whatever else follows, it'll follow. Okay, but we're keeping an eye on this, guys. And please remember, first and foremost, that I'm not a financial advisor. Take whatever I do show and iterate within these videos as just a form of entertainment, as I cannot suggest for you to buy or sell any assets whatsoever. Guys, I have about 3 or 4 seats left in the ArcMasters trading course. Definitely find the email in the description below. Get enrolled, and it should be starting this weekend on Sunday, 5 p.m. Pacific. Okay, you guys, so please remember that I also have the Discord and the Twitter links in the description below if you so feel like reaching out to me personally. Okay, well, thank you so much for watching, and I wish you a very good night and a great weekend, and I will catch you at the bell mañana. Not mañana, freaking Monday. Jesus, guys, come on, man, stay sharp. All right, later, guys, peace.